Hello, hello, hello. I am Karsha Campbell. In this video, we are talking about two key ways to save on taxes that your business pays. Now, who doesn't want to save on taxes, pay less? I'm sure everybody wants to pay less taxes, right? That would make you extremely happy. So that is what we're diving into in this video. Two key ways to save on taxes, paying less taxes by your business. So I am Karsha Campbell, Cashflow Maven. I do help business owners in the construction world, contractors, trades, helping them to save on, taxes, helping them to have reduced costs, helping them also to increase their cash flow coming into their bank account, helping them to say goodbye to confusion, chaos, overwhelm about what's happening in their business. A lot of times, you're saying, okay, there's so much confusion, this is happening. I really feel so overwhelmed. I'm just like, okay, I can't be bothered. So I partner with you as business owners to help you to say goodbye to all that. You're able to spend more time on things you want to do, time with your family. Might want to, be less in the business as well, depending on the stage you're at. You want to focus more on working on the business instead of in the business. So we dive into a lot of strategies to help you to make that happen. What are those two ways that you can save on taxes, paying less on taxes? One, it might seem very like, really? But yes, ensure that your business transactions are recorded properly. Make sure that they're categorized properly. What do I mean by that? A lot of times, because your business is not, the transactions are not being classified properly, then you have incorrect reporting. So, for example, you might purchase a piece of equipment for your business and you are not recording it as a capital asset, you are recording it as an expense. Again, that's going to be some mismatch there. So, again, that distorts the amount of taxes that you pay. It could be you're purchasing supplies, but you're not categorizing them properly. It could be you're going out for lunch, meals, entertainment, and they're not being categorized properly. Also, if you're registered to pay sales tax, it's not being broken out properly. So all these things, they may seem like insignificant, but yes, it can have a huge impact on the amount of taxes that you're paying. So one of the ways in which you can minimize this happening is to ensure that you have a chart of accounts set up properly in your business. A chart of accounts is basically customized for each business. It's just basically grouping your expenses into relevant categories. So if you have certain supplies, if you have certain types of materials, it's all coded properly in your business. So this makes a huge difference in your reporting, and it affects so many areas of your business. It will affect how your profit is reported. It will affect, again, how it filters over to your taxes being calculated. So that is why it is so important to ensure that transactions are categorized properly in your business. They are recorded with less risk of errors and minimal errors. We know we try to eliminate all errors, but things do happen. So minimal errors are taking place when your transactions are being recorded in your business. So this again is something that a lot of business owners struggle with it. I've seen it happen because you are you from the beginning you have not set up your chart of accounts properly. You don't have the right categories in your business set up to record your transactions. It's not reflecting what is happening in your business. So that is why it is important to sit down with an expert, someone who can help you with coding and having that all set up. And again, it doesn't have to be you personally doing it as a business owner, but you do have the right support team. You have the right persons who are going to be making those categorizations and make them accurately in your business. So look at what's happening in your business. Is it a case where you are not recording things accurately, right? You're making certain purchases and they might be for supplies, but they are being capitalized. I've seen that happen a lot, right? Where you're purchasing probably a small piece of item, probably a smallware, something like that. And what is happening, you're capitalizing it, which is incorrect. And again, that is going to be affecting how your profit is reporting, it's affecting your expenses. And again, that will impact the amount of taxes that you pay. Because for sure, the profit that you make will affect the amount of taxes that you pay. It will affect the tax bracket that you're in. It will affect the tax calculations, certain deductions, certain credits. So that is why it is so important to ensure that your business transactions are categorized properly in your business. Another thing I'll talk about is the impact of transactions that are not being recorded in your business. So transactions are taking place, they're not being recorded in your business, omitted transactions. They are missing transactions, and these will again impact the amount of taxes that you're paying, because if certain transactions, certain sales, certain expenses are not recorded, are not reported, again, your numbers are incorrect, your numbers are skewed. So that is why it is very important to have that effective system set up in your business to minimize the risk of unrecorded transactions, omitted transactions, because they do have an impact on what is happening in your business. They do have an impact on your decision making as well. So what can be happening is that you are, they're operating your business, you're making decisions on reports that are incorrect. All the transactions are not reflected. So for example, you might have, let's say you have made certain sales and they're not reflected in your business. Again, that's going to affect your bottom line. It's going to affect your profit, and you're making decisions on incorrect numbers. You're paying taxes on incorrect numbers as well. So I'm hoping you're seeing the connection with everything that happens in your business. So if you don't record your transactions accurately, it skews your profits, it skews your, it impacts your decision making. It also will impact the way your taxes are calculated, your tax bracket that you fall in, the tax calculation, and so much more. So it might seem like, okay, I forgot to enter this transaction, it's not a big deal. Yes, it's a big deal. So that is why, again, I can't stress enough, because I see it happen ever so often, where because of what's happening in the business, there is a lot of confusion. There is, mismatch with what's happening. Things are not being reported correctly, timely. Transactions, sometimes it's probably, if there might be a deposit coming into the bank, he said, oh, I didn't realize I made the sales, I was not recorded properly. And again, the systems that you have set up in your business will impact that. So if you are recording your transactions in a book or Excel, and I do know, let me interject quickly, that you do have some persons that are using Excel, and again, it depends on the volume of transactions in your business. There are some Excel files that are really, can capture things accurately again, and, that's okay. But make sure that whatever you're using to capture the transactions in your business, it's, has a reduced risk of error. So if you're using an accounting software, again, you want to make sure that it is being updated accurately and timely by somebody who understands what to do. I know I've had a lot of situations where you have to be cleaning up, and it's a mess. And it's not only the work that cleanup takes, it's when you look back and see the missed opportunities, right? It could be that you have the opportunity to invest, or you had the opportunity to expand, but because your reports were not accurate, those are missed opportunities. So it might seem, oh, not a big deal. It is a big deal when your transactions are missing, when transactions are reported inaccurately, and when transactions are not reported timely. So make sure this is happening in your business. So you probably heard the computer term, might not only be a computer jargon, garbage in, garbage out. So if you're not setting up your business to ensure that transactions are reported timely and accurately and categorized properly, of course, it's going to be garbage in, garbage out. So it's a flow, right? I always say everything in your business is connected, it's interlinked. So you might say, this area doesn't impact this area. It does, and it will lead to these are the consequences of what happens when things are not set up effectively and efficiently. Systems are just not working in your business. You're not able to detect things accurately, and you're not able to, again, report the right profit, which is what's used to calculate your taxes. The second issue, which will affect the taxes that you're paying, is not having a tax plan. And a lot of times persons might, small and medium-sized business owners, they might be like, okay, that's not for me. Yes, a tax plan is for everybody. It's for everybody. It's for personal individuals, it's for business owners. You need to have a tax plan. What is a tax plan? A tax plan is simply a strategy to save on taxes. And a tax plan cannot be effective when you're just bringing your numbers 2 days before the taxes are due to be filed. Your tax preparer, your tax expert will not have enough time to dive through, to comb through everything, to dive through what's happening, to ensure you get the best, tax bracket, to ensure you get the best deductions. When it's so rushy, they're looking at probably 100, 200 tax returns. So that is why it's important to have a tax plan. How do you have a tax plan? In setting up a tax plan, excuse me, basically with a tax plan, you need to meet with your tax preparer early. So it could be at the beginning of the calendar year, your fiscal year in your business, and you're sitting down and saying, this is my situation. Your business situation impacts your personal situation. So that is why it's so important to have an effective tax plan. So you meet with your tax preparer timely early in the year, and this is my situation based on the tax laws, based on the business environment. What are the best ways I can save on taxes? What are things I should be doing throughout the year? Documents I need to be having. Documents I need to be saving. What are the strategies for me to ensure that I do pay less taxes at the end of the year? That's basically what a tax plan is. And again, a tax plan can change. So because tax laws change, right? The business environment changes, the economic changes, your internal business strategy may change as well. So all that will impact the effectiveness of your tax plan. So throughout the year, you touch base with your tax preparer. This has changed. What do you think? Are we still on the right track? And from there, so a tax plan is basically a way to save on taxes, and it needs to be done timely and frequently updated as circumstances and situations change in your business. So make sure you are meeting with a tax expert. It doesn't have to be an accountant. Most times it is an accountant, a CPA, who's going to be doing that for you. But remember that your business is so important. So you can't leave your business to persons who are not very experienced with certain tax laws, certain tax deductions, certain tax credits, which are tax deductions, tax credits are basically ways that you can apply certain, benefits, certain percentages to ensure that you pay less taxes, certain rules that, you do pay less taxes. For example, if you have children, that's a different situation. If you, are filing as an individual, if you're filing as a company, all these different laws change and they do impact the taxes that you pay. And again, it depends on your business situation. You might have started out the year as, let's say you started out as a sole proprietor, but you've since been incorporated. Again, that's going to impact the taxes that you pay. That's why it is so important to have that ongoing communication with your tax preparer, your tax expert, right? So if you're going to be going to just, some tax, office to say, okay, this is my situation here. You have to ensure that they are understanding your situation, your personal situation, that is all linked. You have to be clear that they do understand what should be done, what should not be done. So a lot of times, it's like some persons might be saying, okay, I just want the cheapest way out, but you have to remember that your business is so important. Think about your business like some persons like to say a business is like a baby, and they use that analogy and stuff because most times parents will go that extra mile. There's some parents there's nothing they'll do to not ensure their children are taken care of. And, I can relate to that as a mom. When I think of my sons, certain sacrifices, certain situations that have happened, and you're like, you want to make sure it's the best. You want to make sure that you're making the best choice. There's no limit to what you really want to do for them, right? The sacrifices that you'll make. So think of your business in that same way, right? And also, there's so many persons' lives that are depending on your business. Think of it, if your business goes down, persons are not going to be getting your service, your products. Persons are not going to be getting that expert, output from you. And think of it too, that lives are also dependent on you, your team, contractors, their families. It's like a snowball impact. The economy is the foundation of the economy, the backbone of any country is always the small and medium-sized enterprises. So that is why it is so important to ensure that you do have a tax plan set up for your business, one that really is impactful and again will make you pay less taxes. And I'm sure everybody likes to pay less taxes. So those are the two key things to ensure that you do pay less taxes for your business, ensure that your transactions are recorded accurately, timely, there are less risk of missing transactions, ensure that you have your chart of accounts, which is really grouping the transactions of your business. Make sure that it's set up properly and accurately, and that will flow over into how your taxes are prepared, the categories that are used, and make sure that you do have a tax plan which is prepared by an expert, someone who will be able to understand the tax laws, understand that your business situation does connect to your personal. Make sure that those are two key things that are happening in your business. If it's not happening, it's time to let it start happening. Reach out for help. I always say, not everybody, you won't know everything as a business owner. That's fine. It's no excuse to stay at that point, though. You need to reach out for help. And, there are so many experts around who will be able to help you and guide you in the direction which will help your business pay less taxes. So that is what our talk was on today. If you do have any questions, please reach out, or if you do have any concerns, if you're like, this, I didn't understand this, or this isn't clear, definitely reach out and I'll be happy to chat with you more. So signing off, this is Kersha Campbell, helping your business, save on taxes, increase your cash flow, and helping you to say goodbye to frustration, overwhelm, and anxiety about all that's happening in your business, the confusion, the chaos, the money holes, the money leaks that are there. So until next time, we'll talk again soon, guys. Bye.